Show me the crypto. Show me the crypto. Show me the crypto.
In a world on the brink of disruption, two men will bring you clarity by interviewing some of the most intelligent and influential names in the blockchain world. Welcome to Show Me the Crypto with your hosts, Wade Patterson and Ulf Lonergan.
Well, hi there, and welcome to Show Me the Crypto. My name is Wade Patterson.
And I'm Ulf Lonergan.
We're a couple of friends from Canada who love learning about cryptocurrencies and blockchain technology, and we're happy you're along for the ride. Whether you're a crypto virgin or you know your way around the block, we hope our interviews with some of the most intelligent and influential people in the blockchain space help deliver you with value. And on this episode, we're joined by Amit Gajjala, co-founder of Stader Labs. Born and raised in India, Amit didn't discover crypto's potential until 2019. However, it didn't take him long to dive in headfirst. Along with his co-founder, Sidhartha Doddipalli, Amit built Stader Labs with the ultimate vision of onboarding the next billion into the staking ecosystem. Amit, welcome to Show Me the Crypto.
Thanks a lot. Thanks a lot, Wade and all, for hosting me and having me here. And to all the viewers who are tuning in to watch the show.
Yeah, absolutely. Our pleasure. We're excited to get into this because we haven't really done a staking 101 deep dive. And so we're going to get into all of those things. But where I want to start is the fact that you discovered crypto in 2019, which isn't that long ago, and all of a sudden now co-founded Stader Labs. I mean, what gave you the conviction to dive into crypto full time?
Let me quickly introduce myself. I have about 10, born and like you said, I was mostly raised in India. Have about 10 years of professional experience across strategy consulting and business roles across top Indian startups. In late 2019 is when I discovered crypto. I just went on an exploratory period of about six months to 1 year, just trying to understand what is happening in this space, the type of applications that are getting built, and the whole scene around the entire blockchain and decentralized technology. I must say, in the beginning, it just really fascinated me, and I started digging deeper and deeper. At one point of time, I was actually running these Excel sheets that were simulating DeFi protocols, and I was just trying to figure out how each of them is working. So that got me really excited. And the more I started understanding the space, I realized that there are three major areas that there are three major trends that are really happening in the background. One is it's completely open sourced and transparent. That means a lot of innovation is happening in the space, and really brilliant minds are hard at work building something or the other, whatever they feel is going to be meaningful for them in this space. And I looked around, compared it to a centralized banking applications or centralized internet applications, right? It was just so much more powerful compared to any centralized application. And of course, the second biggest thing was it was like borderless, like internet, where sitting in India, I can build applications for the entire world. Of course, even in Web2, we can build those things. The most exciting thing for me was now there is value associated with it, and I can create value. I can transfer value. I can reward people in value by minting my own currency, which is the tokenized ecosystems that people have been building. So wow, this was the three ingredients were the perfect fit. Right now, the one sentence that came to my mind was, "Wow, this is internet on steroids."
So true.
Love it. And Is my understanding that in your experience, when you were first dabbling with crypto, and learned about staking, and you tried staking out yourself, you ran into what you would call some problems. You found some challenges with how staking worked currently, and that those problems ultimately led to you starting Stader Labs to resolve them. So what were those main challenges you found, and what was your experiences, trying to overcome those?
Yeah, absolutely. So let's. I obviously started my journey by buying Bitcoin, Ethereum, and slowly started getting into the understanding the mechanics of the altcoins, including Solana, Luna, and Atom. Uh, and obviously, there is no staking in Bitcoin. There is staking in Ethereum. And then as they're transitioning to the proof of stake network, and there was staking on Terra, staking on Solana. So I started staking my Luna on Terra. Obviously, the big problems that I faced were there were these tiny rewards in different currencies that were coming out. Before I even began my staking journey, I was like, there was a set of 100 validators. Who do I choose? Who do I pick? Right? And what is their uptime? Who is generating the best rewards? What are the risks of staking with any of these validators? So I was like, at the moment, at the first, at my beginning phase, I just like picked the top two guys and just take to them. And then I realized, oh, there are so many guys who are generating the best returns. I couldn't find answers to my questions. And obviously, I turned to my partner and current co-founder Sidharth. And he, being a veteran in the space, he used to run his own mining pools and mining optimizers back in the rosy altcoin days of 2017. So I turned to him for advice. So he started showing me this is how the nodes are run. These are the important metrics that one needs to evaluate before you pick a validator. Obviously, I didn't even know there was commission. And then I didn't even know that there were airdrops that were accumulating. I'll have to go and claim all of these. So this was like, I'm a reasonably decent techie who can, like, if I dig for an hour or so, I'll be able to make sense of all these things. Now imagine people who are just entering into the space, like my mom, your mom, and probably my sisters, right? They are not going to understand all of these things. All they will understand is, hey, here are the nodes. If I stake with them, there is 8% return. These are the risks. It's low risk. Okay, let me just go put my Luna or Solana to use on these platforms. That's all they need to know, right? Mm-hmm. So then the momentary thought was, how can we simplify this discovery as well as the management of staking capital, that is digital assets, across the crypto space, across the POS assets, then slowly across the decentralized applications in a very, very easy, simple to use manner for the next billion users. That's where that's the genesis of something called Stader, which is today. Right?
It's such a good point that you bring up about the confusion. I mean, Ulf and I have been in the space for years, probably 5 years or something like that, and there's still things. I mean, there, like you said, there's airdrops we're not aware of. There's various questions we have before we start staking anything like that. It can be a very intimidating space. So with that in mind, we were chatting before we hit record about how our audience, or one of our trajectories, is to deliver content that's unintimidating for anyone, whether they're brand new to the space, that type of thing. So going really to the basics, what is staking and why is it necessary?
I think one of the most important things, because we all know that proof of stake is kind of dominating the entire crypto space today. And staking is going to be pivotal to entire proof of stake networks, right? That is the only way you secure a proof of stake network. If there is no capital or if there is no staked native assets, then the blockchain cannot be secure. So it's a way for people to secure the networks, right? Originally, the only concept was staking. Now there are improvements on top of it called delegated proof of stake and nominated proof of stake. All of these improvements have come into the staking world. At the fundamental layer of it, it's basically you stake your tokens to secure the network. When one stakes tokens, there needs to be an incentive for the user to stake tokens. That incentive is staking rewards. So it's like it's like pledging your tokens to somebody, and in return you're going to get rewards. There has to be a disincentive for the players who are staking their tokens, which is there will be penalties in case they try to game the system. The penalty is nothing but slashing in case of a proof of stake network.
And then in terms of some of those returns, what are we talking typically? I mean, I know it varies and that kind of thing, but maybe for somebody who's not familiar with this space, what are some of the returns that typically, like for example, that you could expect with Stader Labs?
Yeah. So let's talk about the proof of stake network returns, and then we'll talk about how Stader Labs adds value. So typically, the staking rewards can vary between 3 to 4% of the capital to as high as 20% in some cases. In case of Fantom, it's about 14%. Right. So there is a broad spectrum of staking rewards or staking returns. How Stader Labs helps in simplifying staking and also potentially amplifying their staking rewards or the rewards they could generate with their assets is number one. Obviously, we help in the discovery of node operators. What that means is we curate and filter the top performing nodes and kind of bucket them into different categories and enable users to easily stake them. Second thing is on blockchains like Terra. Right now we are live on Terra, and future blockchains like Polygon, Fantom, etc. We're going to automatically claim all the rewards and restake them. So adding compounding benefits to the user. In case of Terra, several currency rewards are paid out as staking rewards, as well as airdrops. Now imagine each individual user going to different protocols and claiming those airdrops. It's very cumbersome for such users, right? So we're going to automate those processes for the users.
And one of the things you mentioned was the returns, and the numbers you just threw out there were 3 to 4% up to 20%. Fantom averaging around 14. You know, for some who are maybe coming from the traditional space, if you're not so familiar with crypto, those are really high return rates. Why is it that in crypto through staking, the rate of return is so much higher than what maybe you were used to in traditional banking?
Gotcha. So it's very. I don't think it's the right way to compare staking returns and traditional banking returns, right? Because in traditional fiat world, you are actually exposed to just the fiat currency. The risk associated with the price of the fiat currency is much lower, right? Compared to a crypto asset, if you are actually earning staking rewards, you are actually exposed to that price of that particular crypto asset. So you are taking that inherent risk of price exposure to the crypto asset and then earning yields, right? So it's kind of the staking rewards are it's like an incentive for users to hold, not only just hold, but hold it for longer periods of time by pledging the assets for staking.
Gotcha.
So it's kind of apples and oranges, not the right way to compare.
Right.
And when it comes to staking, is it typically, like I would imagine it's a combination of all of these, but is it mostly retail investors? Is it institutional investors? Is it hedge funds? Like who is doing kind of I guess on a percentage basis, the majority of staking?
So it actually depends on the proof of stake network. On Ethereum, there is a significant number of retail audience that is holding ETH and they are staking. But if you compare to younger proof of stake networks, which are VC backed, I think there the institutional staking is quite high. Right? And they have to go through a journey of retail adoption before the retail composition of staked assets increases significantly.
Right.
And more institutions are actually getting into the crypto space beyond the typical crypto native venture capital funds. So I speak to a lot of traditional venture capital funds that are getting into the crypto space more often, and also even the pension funds and large multinational corporates which are looking to diversify their treasury and alternate investments are also getting into the getting into the crypto space, and as a result of their holding crypto assets, they are also looking at staking as a means to generate passive income on top of their crypto assets.
Right. And for those who maybe do have some experience staking, it can really vary from one chain to the next, as in regards to a number of factors. For one, like sometimes there's a minimum requirement that you need to stake in order to stake in the first place. Other times the rates of return are significantly lower or higher compared to the next. Why does it vary so much from one chain to the next? And also, how does Stader Labs, you were getting into that a little bit, how Stader Labs sort of overcomes these challenges and helps reward people without having to go into each individual wallet. Can you maybe explain that all a little bit?
Yeah, I think so. The first question is, why does the staking return vary across different blockchains, right? It varies because of two reasons. Each of the blockchains or each of the POS networks is at different stages of evolution, right? Some of the younger blockchains, they will have to actually incentivize more and more holders to come and buy their tokens and also stake them, because they are at a much younger stage, right? Compared to ETH, which is at a far more matured stage. Hence, the staking rewards on ETH is much lower, right? That's one factor. The other factor here is obviously the transaction revenues that are generated and given back to the stakers. So if a particular blockchain is generating significantly high number of transactions, as a result, high transaction fees, those fees are given as incentives to the stakers.
And you were talking earlier about, in your own experience, trying to choose validators and that kind of thing, and not being aware of the risks. So what are some of the risks that come with choosing to stake?
Yeah. So there are about three categories of risk. One is the financial risk. So different validators can set different commission rates. Some validators initially might set 0% commission rate, but they can increase it over a period of time. So there is one, financial risk. Two is the quality or the network quality of the validator. If the validators constantly go out of the network, obviously the rewards that they're generating over a period of time reduces. At the same time, there is a risk of slashing for these validators, which means these validators, the capital that these validators are staking, can be penalized. Right? In some blockchains, the penalty can be as high as 100% of the capital. In other blockchains like Terra, the penalty can be only 5%. And some of the POS networks are yet to even implement slash.
And so we've talked at this point, we've gone over what is staking, how does it work. We've talked about some of the challenges, talked about some of the risks. Tell us a little bit about Stader Labs. What does Stader Labs do in a nutshell that perhaps overcomes a lot of these risks and challenges and things like that?
Yeah, so one should think of Stader Labs as building the key infrastructure for staking. So think of Stader Labs as a staking smart contracts as a service. Kind of what AWS did to Web2 applications, we want to do that for staking. And we've already demonstrated that on Terra, where we are currently catering to three major segments of users. One is the retail segment with our three products that are already live in the market. Second one is the institutional segment or the funds, where several funds are staking their Luna with us using our private smart contracts. We are also working with several exchanges and custodians to enable staking with them. Now, essentially, the backbone is the same smart contract that interacts with the validators and interacts with several DeFi applications on the chain and does a bunch of automations. Right now, we want to actually expand the same thing across all the major POS networks and offer it as like a staking smart contract as a service in a box.
How long will that take? So, sorry, I'll back up here. Why was the decision to start with Luna as kind of the first POS that you went with?
Gotcha. So Terra is a very interesting ecosystem. I think one of the important products of Terra ecosystem is the stablecoin UST. And like if I were to sum up Terra's vision into three major goals, one is obviously improving the UST, and the associated things are savings, which is Anchor, investment, which is Mirror, and payment, which is Chai. Essentially, what they're trying to do is they're trying to develop real life use cases for crypto and onboard like the next generation of users onto crypto. That kind of resonated very well with us. And the second thing that we really liked about Terra ecosystem was a matured POS ecosystem as well as the validators. There were several protocols airdropping to the users, and some of the users have gained like significant amount of capital by just airdrops, right? And then there are several challenges associated with staking on Terra, like these different currencies of staking rewards and airdrops. And there was a significant gap for a smart contract or automated solution that does all of these.
What are those challenges? Like for someone who hasn't staked on Terra before, I'm not familiar what those challenges are. And I guess my real question at the heart of it is, while Stader Labs currently the only option to stake is Luna. So my question is, why, as someone new maybe to the Terra ecosystem, why would I stake my Luna through Stader Labs versus just through the built-in native staking?
Gotcha. So when you actually stake Luna via the built-in Terra staking solutions, you are getting about 60% of the staking rewards are in Luna, and another 40 to 30%. It actually quite varies. Of the rewards are in stable coins. And these rewards are given in like some 10, 15 stable coins.
Oh, interesting.
So when you're staking Luna, you want to maximize your Luna holdings, not your stables holdings. So now individual users have to go claim these every day or every few days, swap to Luna, and then restake it. All of this is very cumbersome, both in terms of effort as well as cost, because every transaction costs gas fee. So our contract does this automatically every day or every 2 days. Beyond these, for stakers, a lot of protocols are airdropping their tokens like Anchor, Mirror. One needs to go to individual protocols and claim them, but our contract does it automatically. So these are the advantages of not staking natively, but staking via Stader.
Right. And so with your contract taking care of some of that sort of like automation work that the users would want to do anyways, are there associated fees or anything? Like in the grand scheme of things, are users losing a certain percentage of what they would have gained in their returns due to the associated sort of trades that are happening in the background?
Yes, of course. So if one doesn't do all of these stablecoin conversions to Luna, he's missing out on the Luna rewards, right?
Right.
Like what we do is kind of similar to daily cost or dollar cost averaging of buying Luna with the stablecoin rewards, right? And over a period of time, Luna stakers expect Luna price to go up. So as a result, they like when they're doing dollar cost average, it's like buying a ETF every month, right, at periodic intervals. So over a period of time that appreciates, and obviously there is a high amount of Luna that is accumulated.
I really like that example. That makes a lot of sense to me, to put it as, say, kind of like dollar cost averaging. And so how often do these rewards get obtained, converted, and then restaked?
So these rewards are given out every block. So that's like, I think a few seconds. And our smart contract actually optimizes the gas fee versus the number of times that the conversion happens. So it's a bit dynamic, but typically we do it between 24 to 48 hours, once every 24 to 48 hours.
Ulf, do you realize our audience has been either watching or listening to this episode for 20 minutes?
20 minutes? No, they should probably subscribe.
Yeah, they should subscribe. And if you're watching on YouTube, make sure you comment and turn on notifications. And if you're listening to this podcast, especially if you're on Apple Podcasts, leave us a rating and a review.
We're also on Twitter, Instagram, and even TikTok. So go check out the episode description. You can find all that information below. And we have an update on the NFT, don't we?
That's right. We didn't previously mention this, but this NFT for OG supporter is a one of one. There will only be one of this kind ever minted, and we have a few surprises for the person who purchases it. The link is in the episode description.
And back to the episode.
So Amit, we were talking about Luna, but my understanding is that Fantom and Solana are also on the horizon. So is there an ETA? I guess first off, why those two chains, and is there an ETA for when that will be implemented?
Yeah, so our Solana smart contracts are under second audit. They are ready to go live in a few weeks from now. Fantom is about 4 to 6 weeks away. Hedera is probably going to go live in about 3 to 4 weeks. And we are actively working on Polygon as well. We expect to take that to the market in about 6 weeks' time.
And is the functions that we've been talking about for the Luna staking, is that essentially going to play out the same for these other networks as well? Like it's essentially a restaking, dollar cost averaging type of scenario?
So we have about three different products on Terra blockchain. One is a stake pools where we create a basket of high performing validators and users can just simply stake with that. The second product that we also have is a liquid staking solution, where if you stake your assets with our smart contract, you get a representative token that can be further used in DeFi. The third one is a product called Stake Plus, where you can even stake with an individual validator of your choice, yet get all the benefits associated with it. So we are going to take 2 or 3 or one of these products to each of the blockchains, depending on what is more relevant, since each of these blockchains has a very different implementation.
Makes sense. There was something I read in the light paper, and that had to do with gaming powered by staking rewards. How does that work?
It's a very interesting thing, right? Now, today, the addressable market for proof of stake and staking is about $250 billion. And last year alone, I think about $15 billion of staking rewards were given out. This is still when the blockchains are in their infancy. Now, as the adoption of proof of stake networks grow and the number of transactions grow, the entire pie of staking rewards and proof of stake assets will grow manifold from here. It'll probably be in few hundreds of billions of dollars of staking rewards that are generated every year. And I think like fund managers can build hedge funds as well as ETFs on top of these. Right? Our goal is to enable each of these, and of course, gaming being one of the important areas that is also at its infancy in crypto. One can power these games with these staking rewards. Now you are a staker across several blockchains. Now you want to direct all your rewards in buying gaming assets, or you want to play a game using your staking rewards. All of these are easily, since all of these systems are interoperable and composable, it's very easy for somebody to build a smart contract that diverts their staking rewards to any type of application, be it investing in the new age NFTs, or be it investing in playing games or playing prediction markets. Anything is possible.
So to make sure that I'm understanding sort of Stader's role in all of these upcoming staking mechanisms, a lot of it has to do with automating what can be done with your staking rewards and making it more easy for the user to just utilize Stader to, make those choices, and then kind of you don't have to think about it, right? Set it and forget it. Is that am I correct
Yes.
in how I'm sort of explaining that?
Yes.
Yeah.
Yes, that is the first product that we have built. But obviously, since we have been live for more than a couple of months, we have also built improved versions of the first product. One is a liquid staking solution. Second one is actually an individual validator solution that can be customized for any kind of an institutional use case or an exchange-related use case.
Gotcha.
And then, I find it so interesting considering going back to the beginning, we were talking about the fact you got into the space in 2019. And so I'm going to veer a little bit off of the staking discussion and just ask you, what is your advice to those who are maybe hearing about crypto, maybe they thought they missed out, right? Maybe they had the friend who told them about Bitcoin in 2013. They didn't listen. And then now they're like, well, I've completely missed the boat. I mean, as someone like you who just first kind of dove deep in 2019 and have come so far already, what's your advice to people who are new in the space?
So my advice is basically twofold. So most of the new users who are coming into the space, of course, the first thing that they see is the price action of crypto. Some asset doing like a 20x or a 100x. I think my advice to the new guys who are coming into the space is basically be judicious with investment. I've obviously come to the space attracted by the investment side of it, but I think what is more attractive to me is understanding the underlying innovation that is happening in the space, and then investing very judiciously.
Yeah, really good advice there. And then in terms of the future, where you see things going, I mean, so much has happened since you've been in the space the last 2.5, 3 years. Any predictions for the future, kind of not only for Stader Labs, but just in general for the space?
Yeah, I think I can only see that in the next 5 years, the amount of innovation that will happen in the space is going to be mind-boggling. Be it financial applications, be it non-financial applications, and gaming, NFTs, and metaverses. It's just going to be phenomenal, and it is going to happen because more and more smart people are entering into the space. They are building interesting things that are meaningful to them. As a result, contributing to the growth of the overall ecosystem. So that's my prediction about the space.
Love it. Amit, this has been a great episode diving deep into all things staking. Ulf and I like to end every episode of Show Me the Crypto with the same 3 questions we ask every single guest. It's a segment we call You Had Me at Crypto. Ulf's going to ask you those questions.
All right, Amit, you ready?
Yes, sure.
All right. Who is your favorite person to follow in the crypto space?
So I have several personalities to follow in the crypto space. One is obviously Vitalik. 2 is Do Kwon. These 2 are kind of my favorites.
Nice. All right. Second question here. What will the price of Bitcoin be 10 years from now?
It's a very, very interesting question. I wish it will. I'm personally invested in Bitcoin, so I wish it goes to millions, if not tens of millions. So
let's do it. Let's see it happen.
And that's not even the craziest answer we've heard. So just so you know, people have said higher. I think tens of millions is the highest we've heard.
I think more important than the price, I bet on adoption of stable coins and Bitcoin. As right now, the narrative that is running is it's an alternate investment class. What would be more interesting is, some central banks are holding Bitcoin as a hedge against dollar, or some currencies are using Bitcoin as their reserve currency, etc. So more important than the price of Bitcoin is the adoption and more use cases being built around Bitcoin.
True. All right. Third question here. What is the most underrated coin or project in all of crypto?
Other than Stader Labs.
So hard to predict, but I think I can only tell you my favorites and the projects that have inspired me. One of the projects that really inspired me was Anchor and Mirror. I think definitely the kind of applications that a project like Mirror can bring to like the developing countries, where especially India and some of the other developing countries, where it's really hard for us to invest in stocks outside India. It's becoming better of late, but it's not that easy today, right? A project like Mirror is going to change that significantly. So I think
that's one thing.
Sorry, please go ahead.
No, you go ahead. I cut you off there.
Yeah, I would love to see some projects like that. Maybe Mirror itself being more accessible to real users. But I think that's a project that is definitely underrated.
It's one thing I'm curious about before we wrap here is one of the things you said that brought you into the blockchain space initially is that borderless concept and whatnot. And just out of curiosity, I mean, you being based in India, what is it like there in terms of adoption of blockchain technology? And I've heard over time, there's been various government regulations on different things, but what's the situation there?
I think definitely the government is becoming more and more friendly towards crypto, and basically founders who are building startups in the crypto space. The tax regulation that they have introduced recently is a way for them to signal that they're legitimizing crypto investments, and as a result, people who are building in crypto space. That's a great move by the government. I see more and more Web2 founders getting into the crypto space and looking at the potential in the space. And it's only a matter of time that India does what we did to SaaS in the last decade.
Awesome. Well, thank you so much, Amit, for doing a great job explaining everything staking, everything Stader Labs. We appreciate you joining us on this episode of Show Me the Crypto.
Thanks a lot, Brad and Alf, for hosting me and patiently hearing my answers.
Thank you for listening to Show Me the Crypto. Please make sure to subscribe as well as rate and review this podcast.